And you mentioned something very interesting as well, is that because you spend so much investment in terms of your time and mental effort into the stock, that actually kind of stopped you from making the more
Yeah, so
rational
you're
decision.
so like invested in the stock,
Emotionally
and
attached.
Yeah.
emotionally attached. Again, I mean, I guess we will learn over time, I suppose.
Yeah.
Yeah.
Right.
Yeah.
All these things, as much as you can say, or maybe as much as I can say, I've been there, done that.
Yeah.
I've been an institutional trader, but seriously, like in terms of emotional aspect of trading and investing, it's still lacking. Like you still need to improve on that.
There you go, guys. I think this is
Yeah.
a very, very important note. Okay.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Hello everyone, welcome back to the FIRL podcast, best place for long-term stock investing or any form of long-term stock investing for that matter. Today we talk to Rondy Yunanda Yong, and we're going to talk about really where he came from. Of course, then we're going to tell you about Stockbit, in which he's an angel investor of, and why you need to be on it. Then we also talk about what he has learned from his career, his investing journey, his investing philosophy. What does he think? Because he has a trading background, what does he think of the difference between investing and trading? Some of his best investments, his worst investments, some myths that he thinks persist in the stock market today that shouldn't be there. And of course, our favorite is what stocks he's bullish on, what industry he's bullish on,
Market outlook.
and last but not least, investing as a family man and as a father. So welcome to the podcast, Rondy.
Hey, thanks. I'm glad to be here.
Yeah.
How's it going? So I know this is your first time on the podcast.
Yeah. I mean, it's all new, and I mean, I've been doing a couple of like Facebook Live, speaking to managements here and there, but yeah, podcast is very, very new.
Great.
Great.
So I just want to share with everyone your big background.
Sure.
And it's actually really long but simple, right?
Yeah.
Basically, you're CIMB through and through for about 11 years,
Yep.
right? So you started off credit analyst, so that's
I would say I started off as a management trainee.
okay.
I was quite lucky to be admitted in CIMB. During that time, around 2009, I suppose.
Wow, right after the crash.
Yeah,
in a way.
but that time, CIMB was supposedly to be like the Goldman Sachs of Asia
That's
and
right.
stuff. So it was extremely prestigious,
Mhm.
and everybody wanted to be in CIMB. And I guess I was fortunate enough to be able to join their management trainee program then.
Okay.
All right. So then you started at credit as a credit analyst. So for those of us who do not know what it is, really what does a credit analyst do?
Yeah, so I guess part of the good thing about being a management trainee in CIMB then was that you got to rotate between various departments. I would say for about 3 months to 6 months. So one of the first department I was rotated to was this kind of like this department which was called private debt investment. So they were investing, I would say, in bonds which were higher yielding.
All right.
Yeah, for the exco funds.
Mhm.
And yeah, I mean, of course, I was just like a 3 months trainee over there, and basically just tried to help the traders, help my bosses to come up with some sort of good analysis on some certain bonds here and there.
So,
Yeah.
so what was your learning process like being a credit analyst?
Yeah, I think that was, I would say, one of the first time that I needed to start looking into a company in a very in-depth level. Yeah, so of course you gotta understand like the background of the company and what is the, I would say, default risk probability and stuff like that, because these are like the bonds, I would say, that is higher yielding, so there are actually higher risk for it to get default. Yeah, I think if I'm not mistaken, one of the client that I was analyzing then was a listed company in Malaysia called RCE Capital.
Okay.
Yeah, so it's like a
Yeah, finance related, right?
non-collateralized something loan or something
Right,
like that.
right.
Okay.
Yeah. So yeah, I mean these are the sort of things that you gotta analyze. Yeah, top down approach.
Did
bottoms
you
up approach.
did the bank itself, besides the normal credit rating scores from credit rating agencies, does CIMB have their own internal rating scorecard in a way?
I mean CIMB has always have various departments, right? Even later when MJ will get to the part where I was a equity trader and
Right.
yeah. So CIMB has always had like a separate risk department in
Okay.
itself. So
Okay.
the process has always been, okay, if let's say you're on the buy side, you gotta talk to your kind of like superiors, and then you gotta pass some sort of like risk management as well. So it's always been monitored, I suppose.
I see. So they, in a way, they have their own scorecard on top of whatever you get publicly from the other rating agencies, I guess.
Yeah, I suppose you can say so. Yeah.
Okay.
So before we move on to your trading days, which is really I think that's where the juicy stuff happens, right? But you had a stint at FX and derivatives sales. So that's quite different from credit analysis, right? Am I right to say that?
So again, as I mentioned, like the credit analysis part was just a very, very short stint. I say, I would say it was a good stepping stone, but I mean, a huge chunk of my career has always been in the treasury sales. So as a corporate treasury sales, you sort of like sell a bunch of treasury products from like FX to derivatives to like option related products, like maybe dual currency investments, all these sort of things. Yeah.
Right.
So I was there for I'm not sure, like a good maybe 4 or 5 years or something.
Wow.
Yeah.
Okay.
And then came to the juicy part, which was basically there was an opportunity for me to join this I would say equities trading and risk arbitrage department. So what happened was, if I'm not mistaken, somewhere around 2014, CIMB took over like Royal Bank of RBS.
RBS Scotland.
Yeah.
Okay.
So RBS had this kind of like department based in Hong Kong and India, and they brought it down to Malaysia, and there was an opportunity for a junior trader.
I see.
I guess after 4 or 5 years in sales, I've always had a knack for trading and investment, and I thought, it's a good opportunity for me to try and apply. And luckily enough, I managed to pass, and I joined that department. Yeah.
So for those of us who have no clue and will probably never have the opportunity ever to be a trader on the trading desk for a big bank, right? What is it actually like being an equities trader or risk arbitrage and things like that?
Okay, so I would say that I would constitute like my experience in this particular department a lot more different than a normal, I would say, like institutional fund managers in Malaysia.
Sure.
Because in your normal institutional fund manager in Malaysia, if let's say you're an asset manager of even like CIMB Principal or Public Invest or M Invest, I would say that your funds, it's kind of like just a long only fund. So you just buy and you just hold, and sometimes your mandate might be just within Malaysia and stuff like that. So for me, I would say the opportunity I had was very interesting in a sense that I was number one. I think we barely touched Malaysian market because it was just too small.
Okay.
And the market that we touched was mainly on like India, Taiwan, Korea, Hong Kong.
The big Asian countries.
Yeah, the big Asian countries. And we are what we call as a proprietary desk.
Prop trading.
We are prop desk, prop trader, but we are also, or rather we were kind of like heavily invested in arbitrage, like a risk arbitrage. Means not too high risk of an investment and trades, right? So it's very, very focused on like basis points gained. So some of the strategies we employed was things like an index arbitrage in Taiwan, So for that, you kind of like had to look into your cost of funding. So what is the borrowing cost that you get your US dollar from your treasury desk, and then you got to kind of like calculate what is your FX hedging mechanism, and you get like your cost of fundings, and then you look into like what is the index points at the time, and then so what you did was, if let's say I was doing an index arbitrage based on like an MSCI Taiwan, then I had to like buy all 90 constituents of the index. And at the same time, I will have to immediately short the MSCI Taiwan futures. Yeah, so that's kind of like, I mean, you do get this sort of arbitrage opportunities, and yeah, in the market, honestly speaking, there are so many ways of doing trading, right? So some of the things that I would say a lot of retailers, they might not be aware about all these sort of strategies.
Especially the hedging strategies.
Yeah. So sometimes you'll be wondering, hey, how come there is such a huge volume in some certain stocks, right? And perhaps it could be as easy as there is, I would say, like an arbitrager who manages to catch some arbitrage, and they decided to take advantage of those things. Yeah. So that is one of the strategy that we employ. Of course, we did that on Taiwan. We did that on Korea, if it exists, right? And then in India, I would say it's I mean, honestly, like if we are talking about these markets, it is just so much more vibrant than your typical Malaysian market, in the sense that there are just so many products, right? Like in India, there are like I would say different kind of like index. We'll have the bank index, bank Nifty, and all these sort of indexes, and even like there are like so many of single stocks which have its own futures.
Okay.
So there are like over hundreds, or even I would say close to 200 single stock futures. So what it means is that you can actually buy a stock and you can actually short its futures simultaneously to get that single stock arbitrage.
Yeah. I see. Between these markets that you mentioned, India, Taiwan, which was the one that you felt was the most interesting?
I would say India.
Okay.
Yeah, because in India, I would also say it's one of the most fundamentally efficient. I would say there is a lot of smart money over there.
Okay.
And I say that because, as I mentioned earlier, like there are a lot of like ways of you to do a certain kind of like movements. For instance, if let's say you would like to short, like a bank stock over there,
okay,
or if you wanna, you can do so by simply shorting the single stock futures, right? So that kind of like make things a lot more efficient. And so what happened is that, and also there is a kind of like a huge capital gains tax over there. So what that translate is that there are a lot more investment driven individuals in India.
I see.
Yeah. So fundamental analysis is a huge thing over there. Value investment is a huge thing over there. And people generally will buy and they will hold it for a longer period of time, because if let's say you're a trader,
okay,
you will actually you'll get caught in the capital gains tax.
I see.
Right.
Interesting.
So that is really what I would call high finance, right? Because this is really complex stuff. But what would you say are some strategies that you can take from your days as a trader and apply it in a normal retail investing situation? Any retail investors, what strategies can they copy in a way from what you do?
Well, in Malaysia, honestly speaking, there is not much, I would say. Like if let's say you're talking about a simple risk arbitrage, I suppose you can do it on
Call warrants?
Call warrants, yeah. Yeah. So maybe like okay, I mean like people will actually pay a lot of money to get this sort of info, but I suppose what you can do is you can long a call and then you can short the KLCI futures. Sorry, like what you can do is you can long a KLCI call warrants and short the futures, right? Or if let's say you see that there is an arbitrage on the other way, you can actually long a put, KLCI put, and you can buy the KLCI futures.
Why do you think that Malaysia does not have this kind of instruments? Is it because the market is not ready for it, or the retailers don't understand it, or there's no institutional support for it? What I mean, in your experience?
Yeah, I would think that perhaps liquidity is an issue, and generally speaking, the market size is not there yet.
I see.
Yeah. So perhaps that's the main reason. But being small is not necessarily a bad thing.
Okay.
I would say that being an Malaysia is also a rather inefficient market, I would say, for the reason which I kind of like mentioned earlier. I mean, the opposite reason of what I mentioned earlier. But, in that sense, it also have its good side, I suppose, right? Because that's when you can actually make money. So
Yeah.
let me just give you an example, right? So in my trading days last time in a risk arbitrage opportunity, when I'm looking into like, I would say an M&A arbitrage, I would say like in Hong Kong and stuff like that, where there is like an announcement that company A is gonna buy over company B, privatization.
Okay.
You will see that the gap will immediately vanish in in like the very next second.
I see.
Okay, so what happened in Malaysia somehow is that the gap will vanish, but it can be about, I would say 3%, 5%, right? So I'll give you an example. So I did this like a risk arbitrage on Selangor Properties Berhad.
Okay.
I would say a couple of years ago.
Okay.
So that was interesting because like, I mean, I would never seen such an arbitrage opportunity in other markets.
Okay.
So I think Selangor Properties Berhad mentioned that they're going to privatize.
Okay.
Okay, and from the moment they mentioned that, the gap was still about, I would say, 5%.
Wow.
Yeah, it was 5% gap. And honestly speaking, like the risk of that not happening was pretty low, I would say. Yeah.
Probability was very low.
Probability was very low. And of course, there are like some parties who make noise and stuff like that. So you're like, okay, 5%, I don't mind to get into this boat and maybe wait, I would say about 5 months or something. Then if I annualize that, that's a decent 12% return and annualized, right?
Yeah.
And so I went into the boat. So what happened is that after about, I would say 2 or 3 months, minority shareholders make noise, and then they up kind of like the privatization offer.
Yeah.
And they didn't do it once, they do it twice.
I see.
So
from 5, it became
like from 5, and then it became like, I don't know, it became 12, and then it became 18%, and then it got completed in the span of like, I don't know, 6 months or something. And that became, you will never get that in an efficient market, I would say.
Do you back the truck? No,
Did you apply leverage to that, trade? That is the question.
Yeah.
Okay, so now, I do you have any questions?
No.
I really want to know, right? I know we need to get the stock bit, but I just want to know because I don't know many prop traders, right? Having been a trader and then now, would it be fair for me to say you're more of an investor slowly? You've been in these both camps, right? What do you say are some of the big differences in your experience?
Yeah, so I guess one of the thing about being an institutional trader, prop trader, is that you're always bound to annualized performance, KPI, right? So that in itself is like a short-term target. Right? So of course you want to do as well as you can, so you get like the big fat bonus at the end.
Right.
Yeah.
And CIMB during those days they can really pay. So that was like a real big incentive. So yeah, that is one of the, I would say, key difference. Right now, if let's say I'm an investor, and I do invest for kind of like a couple of families, I don't have, especially in some portfolios, I don't have that pressure because, for instance, it could be like a wealth-generating portfolio where I can really just take my time to invest in the business. And I can, just wait until the business really grow and grow and grow. And I don't have that particular annual incentive that I need to catch.
Would you say that your experiences in investing has been more positive versus your trading?
Yes, I suppose so. I mean, in terms of like the track record, it's not a long time because I did that, I would say, ever since 2018.
So about 3 years.
And of course, as we know, last year was quite a
good year.
It was a good year.
Well, depending on what you buy, but mostly a good year.
So that was, so I guess it has, I mean, the data and the result, I guess, it has to be spread out over a longer period of time. I
see.
Yeah.
I think maybe another angle I would ask is that the methods that you are practicing as an investor yourself for managing your money and other people's money, is that something much simpler as compared to your prop trading days?
Oh yeah, definitely. It's a lot more simpler.
And do you see that delta in results by a simpler method, by a longer time horizon? Is it?
So again, during the stint in CIMB as a prop trader, as a risk arbitrager, a lot of things were based on the spreadsheet. So
Okay.
I had like this insane, crazy spreadsheet where, and somehow it's kind of like linked to live prices in Bloomberg and
Oh,
Reuters,
wow.
right? So it just keeps
It just pulls out.
it just keeps blipping red and green, red and green. And whenever you can see like everything is green, then maybe you can put on an arbitrage position over there.
Okay.
So I would say a lot of the time is spent like just trying to catch an arbitrage.
I see.
But other than that, there are like, I would say, cases where we would like to apply for an IPO, either in Korea, in Taiwan, in India. So these are the sort of time when you perhaps have to read a little bit more about the entire prospectus of the company and how much you're going to bid for the IPO, and things like that. So those are, I would say, the more analytical part of the trading journey, or rather the investment journey in that particular stint as a trader.
Okay.
Yeah.
And then in your current days, in a way, it's much simpler, a lot more, I would say, analysis of the business.
Yeah. So it's the same.
Yeah.
There are a lot of things that I took away from my CIMB days to actually and applied it to the current position, but I would say that right now, investing in Malaysia, I'm actually learning the other side of the coin, I suppose. More into like flows, more learning about the characteristics of the Malaysian market and how to take advantage of these things. Maybe we can touch on that later on.
Yeah,
For sure. Okay, so now, great job, fat bonuses. Why Stockbit? What is Stockbit?
What is Stockbit first? Ecosystem.
Okay, so Stockbit is maybe first I'll just introduce on how I first came across Stockbit.
Yeah.
So I would say like it was sometime around 2016 or 2017. I think it's 2016. So 2016 there was a big IPO in Indonesia.
Okay.
And my boss asked me to take a look into it.
Okay.
See if we would like to apply into it, right?
Okay.
So one of the factors, if let's say you would like to invest in an IPO, especially in like a smaller country like Indonesia, is you really would like to understand how the retail sentiment is going to be like.
Okay.
Yeah, because that plays a role as to how fast your capital appreciation might grow. So yeah, I mean that was the first time when I was like trying to see, is there a forum or like and that's the first time I came across Stockbit. Yeah, so when I looked into Stockbit and I just I'm like, okay, this is a very interesting approach, because during that time, about 2016, everything was still like forum based technology.
Yes,
right?
yes.
So and we were starting to shift into like social media. And Stockbit actually took that into account. So it is the technology it's providing to manage the community was based on social media, not really based on forum technology. And yeah, so that was the first time I came across it, and I was like, hey, you know what? If let's say I am done with my trading days and my career days, if let's say I would like to get out and do my own thing, this is something that I think I might be interested to do.
I see.
Yeah. So that was the first kind of like encounter, and I would say that in 2017, when I thought, you know what, I mean during that time, my personal work-life balance and things like that kind of like weigh on me, and I decided, you know what, maybe it's a good time to move on, right? So then I recalled about Stockbit, and I decided to take the proactive approach to try and contact the founders.
Okay.
Yeah. So
and they're Indonesians, right?
Yeah, they're Indonesians. Yeah. So there's Wilson and there's Sigit and there's Johnny as well. So there are three of them. So so when I first spoke to Sigit and Wilson, the founders, it was just like as if I was talking to myself. Yeah, like we got along right there and then.
I see.
Yeah, we spent like hours talking and stuff like that. And yeah, I mean during that time, I have been like a stock investor for the longest time, right?
Yeah.
So but I was extremely interested in the project, in the Stockbit project.
I see.
And during that time, they were doing like some sort of fundraising. I think there was a seed round or like a pre-series A round and stuff. And I was like looking into it. And I'm like, hey, you know what? I really like, this is something I can relate to myself. If let's say I get out from my career and if I want to build something, this is something that I really would be proud to build. Okay, like It's just like I'm trying to set up like a technological platform to make investment easy for everybody, to make it like an organized data for the retail investors, so that and somehow I came from like institutional background.
Yeah,
So when I look into institutional and retail, the gap is like massive, right?
it's huge.
Yeah, it's huge. So what I wanted to do, and the values of Stockbit, and even like the value of the founders, is that all they have always wanted is to narrow the information gap and to level the playing field between like investors, institutional investors, and retail investors. So that's I would say like was their main goal,
I see.
and it was aligned, I suppose, to where I can relate. And yeah, so I was like, hey, yeah, you know what? I am quite interested in your company, and I would like to invest in your company, you know. So, and then after that, they're like, yeah, come on board, right? And then they kind of like say, okay, so this is the valuation of the company. I'm like, what? Because you imagine, right? Like you have been like an equity investor all your life.
Correct.
You look into things with numbers,
Yes,
right?
yes.
And suddenly you are presented with this. And I mean, like even during that time when you're talking about like investments like Tesla and stuff like that, yeah, for sure they are always at a loss. But at least there is like top line numbers.
Yes, that's right.
This was just like a pure idea. It was a
Wow.
pure.
It's pre-revenue.
Yeah, it's
basically.
pre-revenue. It's like it's got nothing. It's
Lucky
only have
power.
like it's got like only maybe like 50,000 users during that time.
Did it even have a term sheet?
Yeah, they did.
Okay.
But
Right,
yeah,
not bad,
like it was just like an idea.
Okay.
But the thing is, I suppose you know, this is I suppose like where VCs comes in.
Okay.
Like you just have to have that mentalist like a VC mentality, and I would say like pull the trigger or take a leap of faith, I suppose, into an investment. And I would say that in startup investment, if anybody wants to venture into that going forward, right, I would say that the founders, the idea and the vision of them, and their attitude and their passion, it's perhaps number one quality.
Yeah.
It's number one quality, and it's number one metric on if, let's say, you would like to invest in it or not.
Yeah, it's not a spreadsheet metrics that you can apply.
No, it's not your like your fundamental metrics or
Valuations.
whatever.
Yeah.
No.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content, and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
Yeah.
So that's how you came into contact with Stockbit.
Mhm.
Now, what would be your best way to explain what Stockbit is, and
Yeah.
why should people be on
Stop
Stockbit?
it. Yes.
Okay, so yeah, I mean, so that was the beginning, and I decided to invest in Stockbit. So I'm actually an angel investor in Stockbit,
Okay.
and I suppose like Stockbit ultimately is a social networking platform for stock investors. It's a place where like any retailers or investment community people that would like to find out more about a particular stock can go in. In Indonesia, it's a lot more comprehensive in a sense that there is like the fundamental data. There is like a place where you can do screeners. There's a place that, I mean, even for now, right, as we speak, in Indonesia, it's like a one integrated platform. It's a place where there is a community. It's a place where there is like information about stocks. You can do the screener, fundamental analysis, technical analysis. You can get the news, you can get the announcements and reports, you can get all the corporate actions, and you can even trade from Stockbit in Indonesia.
Okay.
Yeah. So it's like a real one-stop
shop. Okay.
Yeah, one-stop shop.
So you should have at least 1 million users by now already.
Yeah, there is 1 million users in Indonesia. So
Okay.
in Indonesia,
Wow.
if let's say you're a retailer in Indonesia,
Okay.
the one app that you will have in your phone is Stockbit.
Wow.
Yeah.
Fantastic.
that's
Because it's like, can you imagine the brokers?
Mhm.
How does Stockbit actually create their own data from source, or do they buy their data from someone else?
So in Indonesia, they own the data.
So that means there's so from the exchange, I'm guessing. Let's go all the way back from the exchange. There's a report that comes out, right?
Yes.
And Stockbit actually houses a team that acquires that data and manually enters it.
Yes. If it is in a certain kind of like large cap, it will be updated in 4 hours, within 4 hours.
Wow.
Everything. Not just like the income statement.
Okay.
It will be income statement, balance sheet, cash flow. Everything.
Wow.
A whole set.
Wow. And the brokers that are linked to Stockbits, are they like open to all brokers that are willing to work with you in Indonesia?
No, there is only limited brokers that we partner up with.
Okay.
Yeah. So
All right. So there's 1 million users in Indonesia already. Malaysia, how many?
Okay, so in Malaysia, so basically Malaysia is kind of like our side project.
Okay.
In a sense that, I was just telling them, hey guys, we do have like, I would say plan to go regional. I would say maybe in the next 5 years or 10 years.
Okay.
And since I'm in Malaysia, why not we just open up like just another country.
Okay.
Right. So they say, yeah, okay, let's try it out. But seriously, like the amount of money invested in Malaysia is close to nothing.
I see.
Yeah. So so what happened is that we came up with the entire 900 tickers of the stocks in Malaysia.
Okay.
We feed in the prices from Bursa.
Okay.
And we let the community part of Stockbit apply in Malaysia.
I see.
So for now in Malaysia, what you can see is just the community element of it. Yeah. You're not gonna be able to find information such as like the fundamental information because we don't have that yet.
I see. I see.
It's something that we are still working on.
Okay.
But yeah, hopefully in the near future we can provide that. So our features and the Malaysian features and Indonesian features can be more in line.
I see.
But right now it is just the community platform.
I see.
Yeah.
Okay.
So the idea on why I thought Stockbit could work in Malaysia is, of course, that was in 2017, and I decided that in 2018, maybe Stockbit should venture into Malaysia. And because in 2018, in the beginning part of my, I would say like a family office investing for family funds kind of like career, I do try and invest in the place where I'm living, which is in Malaysia. And I thought that, a lot of the things in the Malaysian market is still very unorganized. And I just felt that Stockbit could be a disruptor, and it could be an alternative to provide a healthier community and stuff like that. So I thought, yeah, why not bring Stockbit over? Because, unlike some of the alternate platforms, which are still based on forum technology, right? So, Stockbit, again, is a social media technology, and it provides you with kind of like, I would say, more accountable users, because number one, there are like a 3 steps verifications for you to log into Stockbit.
You can't be a phantom user.
You can still, but you need like a lot of things, like your phone number lah. Like there are three categories for you to be a user in Stockbit. And the good thing is that for Stockbit, a lot of the control is in the user's hand. So for instance, if let's say you find this guy like annoying, right, and you would like to report him, so you can report him. Or if let's say you would like to block him, you can block him. Yeah. So you see exactly what you want to see.
I see.
Yeah. So for instance, if let's say you have a certain stocks that you would like to monitor, then you put them into your watch list,
yes.
right? If let's say there are certain people that you like
to
follow, then you put them into your following list, and then you can adjust like your alerts, your notification. So let me give you like an example in how this works, because it okay, so I would say I'm not quite sure which year it was. I think 18 or 19. This is how I would say Stockbit has brought retailers closer to the information that is being earned by institutions.
Okay.
So we are feeding information from either the exchange or the news. It's refreshed every 15 minutes, right?
Okay.
So I would say like there was a time where I had this counter as somehow in my watch list. It's called Prestariang.
Okay.
Yeah, I was trading on the counter actually, right? And I would say it was about 12 o'clock or 11:50 or something
First
like
break
that.
lah, midday break.
Yeah, and then suddenly, like in my Stockbit, there was the push notification about Prestariang having some sort of their contract, their government contract got cancelled or whatever. And I'm like, oh, this is big,
Yeah.
right? So I straight away like sold off my Prestariang. And after that, like the news got absorbed over lunchtime. And after lunchtime, when it opened, it just went
Crash.
Yeah.
it just crashed. So that is, like when I was an institutional trader, these are the sort of live updates I get
From
my
Bloomberg.
Bloomberg screens
Yeah.
and stuff like that, right?
Yeah.
But I suppose like this has come into the retailer space right now
Okay.
from the alerts that we are giving in Stockbit.
I see.
Yeah.
I see. And in a way, when the 3 founders or 4 founders of Stockbit started in Indonesia, have they gotten clearer to, in a way, how they monetize Stockbit?
Yeah, I believe so. So in Indonesia, the way we monetize Stockbit is definitely through the brokerage fees.
Okay.
Yeah, but I would say that Stockbit is still on the growth stage.
I see.
So we recently closed our Series C funding.
Okay.
And I would say that our Series C funding is largely contributed by our sister company. So Stockbit is just like a group, right? So we actually own 2 platforms.
Okay.
One is Stockbit and the other one is like Bibit.
Okay.
Bibit is, I would say, like the Stashaway of Indonesia.
I see.
It's a robo-advisory for Indonesia. I would say we are ranked either number 1 or number 2, right? So that is where I would say the big monetization comes in as well. And it's easier to monetize and it's easier to market investing rather than investing in the stock market.
Understand.
Yeah.
Understand.
So Bibit is really growing very, very fast.
I see.
Yeah.
I see. And do you see the same monetization method applicable to other countries in the region in a way?
Maybe not right now, but in the future, yeah, I think we can perhaps follow the same model.
I see.
Yeah.
I see. Just one last follow-up question on that is that why do you think by users being more transparent or being more responsible promotes a better ecosystem?
Well, I guess it's all about accountability, right? And it just promotes healthier discussion after all. Like what I understand is in the other alternate channel that is available in Malaysia, perhaps like out of 10 comments
Or threads,
or threads or whatever, you can only find perhaps like 1 useful commentaries.
I see.
Yeah. So what we are trying to build is just plainly a healthier community. A community where it can really build your thesis and I would say argument and discussions into a particular stock. Yeah, you can, of course, during my time in Stockbit, I would say I have gotten various trade ideas from just generous individuals sharing their trade ideas in Stockbit.
I see.
Yeah. So, and I have also kind of like share my ideas in Stockbit from time to time. A lot of people, I would say, have replied.
Okay.
And it just gives me like another angle. And I'm not always right. I'm still learning.
Yeah, yeah.
I'm in Malaysian market for about only 2 to 3 years, right?
Okay.
So there are still a lot of things that I need to understand. And by just having a community, it really develops your thesis in a more convicting manner.
Okay.
Yeah.
Yeah.
You get either opposing viewpoints or maybe things that maybe you have missed that they will bring up, so it strengthens your case lah.
Yeah. I mean, honestly speaking, one person you cannot cover 900 stocks.
Exactly.
Anyway,
That's right.
Exactly.
So, and there are so many various good stocks in Malaysia.
Yeah.
And just leverage on the community, I suppose.
Great.
Let's talk a little bit about the Malaysian market now, right? And so you've also obviously, because of Stockbit, taken a look at the Indonesian market. And correct me if I'm wrong, I think the Malaysian market is bigger in terms of the market cap. It's so Malaysia is about $1 trillion. I'm not sure what Indonesia's is.
Yeah. So in terms of just purely the number of stocks and I would say like the volume traded and the value being traded, especially in 2020, I would say that Malaysia is the highest in the region, I would think.
Oh.
I mean, I only studied between Malaysia, Singapore and Indonesia.
Okay.
But even Malaysia value in US dollar terms is higher than Singapore. And that is pretty remarkable because remember, Singapore's exchange rate is 3 to 1.
Yeah.
Yeah, so that is I mean, last year I would say Malaysia is really up there lah, I would say.
Wow.
Yeah, yay, Malaysia boleh. So, because before the podcast, you did mention that you want to talk about the characteristics of the Malaysian market and how unique is it. And
Yes,
early on you tease us with words like efficient, inefficient, and all that.
Inefficient, yeah.
So maybe really explain a little bit deeper what do you mean by that, and really what are the things that you've observed about the Malaysian market.
Okay, so I would say, like, if let's say I would like to bring value from Stockbit into the Malaysian setting, for instance, right? The very immediate value I can think about is just plainly on the fundamental data.
Okay.
Okay, because as everybody know, data is the new oil, and data can lead you to think in a certain manner, I would say.
Yep.
So what I understand, if let's say for the 3 years that I've been here, looking into, like, from the point of view of a retailer, and trying to understand the characteristics of KLSE, right? It's that, number one,
No, just keep talking. Okay, he can keep talking. Okay, sure, no problem.
Yeah. So number one, what I can see is that a lot of the aggregator applications that everybody uses, right? A lot of their data is scraped, or maybe it's sourced from Bursa Malaysia. And Bursa Malaysia actually have a very summarized view of that data, and it is very much dependent on income statement. Okay, so just again a summary. Right now in Malaysia, right, the data that you gather from all the places that you have, like all your apps, all your platforms that you regularly visit, it is very, very centered on income statement. And this is because the data they gather it from Bursa Malaysia is basically the summary page. So you will always see, if let's say kind of like an earnings season, you look into the Bursa summary page, right? It's always like revenue, profit before tax, profit after tax, earnings, EPS, and then dividend, and then net tangible asset.
Yeah.
So these are the sort of metrics that you will see in your regular apps.
Okay.
Okay. Now this, I would say, is okay. Like a lot of the apps like Galaxy Screener is excellent, right? Like Stock Hunt or
Stock Hunter. Yeah.
Stock Hunter is okay.
Yeah, I use it.
Yeah, and Malaysia Stockbase, definitely everybody uses that.
Yeah.
Right? So but all of them basically source their information from the same place.
I see.
Okay, and it is not that they do not really own the data set.
Yeah.
Okay, they don't own the fundamental data set. They just organize it in a very nice and flowy manner.
Okay.
But that is the problem in itself, right? Because now you have like a market which is very, very centric on income statement. Yeah. So what you are seeing is that a lot of people, when they try and analyze the stocks, when they talk about stocks, everything is related to the price earnings ratio.
That's
It's
right.
very, very PE based, right? And sometimes it can be even be based on like net tangible assets. And that in itself, I would say, is okay, but it can be dangerous in a sense also, because as everyone know, like if you are too focused on PE, you are really like forgetting about all the other angles that could be crucial in an investment.
Correct.
So, for instance, things such as cash level.
Yeah.
Are you actually getting paid for the revenue that you're getting, for the income that you're making, right? And like, what is the leverage level? So this sort of thing are not really visible in Malaysian market, I would say, because just plainly because the data is very, very centered on income statement.
I see.
And so, so for instance, maybe if I can give you guys an example, maybe like there's a counter in Malaysia that is, I would say they are like IT provider or something like that, like a software provider.
Okay.
And it's trading at like a single digit PE, right? But if you really dig deeper, you are seeing that, this company has never been paid ever. Like they have been like collecting revenue, they've been making tons and tons of profit, but they have never get paid, like ever. From 1 year the accounts receivables is like that, and then from another year their balance sheet in like long term asset grows by one line, and then by another line. It's just a matter of time before things gets impaired, right? So I think that's something that have to be taken into account as well. And I hope that if, let's say, Stockbit do get bigger and do expand in Malaysia, it's something that we can address.
I'm looking forward to the day.
Yeah, you have our full moral support.
Yeah.
Right?
Thank you.
Right. Yeah. So that's basically PE focus, earnings focus. That's something you think that in and of itself is not bad. It's just when it's only PE focus or only earnings focus. What are the things that you see in the Malaysian market where you go like, yeah, that needs to change?
Yeah.
Big gaps that you see.
Yeah. So again, for instance, like the data that is being collected and collated in Malaysian market, it doesn't really serve purpose. For instance, like sometimes when you talk about a PE ratio of 20, right? And then a lot of I would say Malaysian analysts or analysis by retailers, they like to compare this by peers, but that in itself is just one way of looking into things, right?
Okay.
Maybe what you can do is you should be able to look into it from a historical point of view as well of the company, because every company, it might not be like an apple-to-apple comparison.
That's right. That's right.
Yeah. So, and if it is just so income-based and income-focused, like and PE-focused, right, you will never kind of like, I would suppose, the phrase I would like to find is like the next big thing. Yeah. So, because if let's say you're so PE-focused, you will just ignore all the companies that is like loss-making and things like that. You're not really like looking into companies that in the future can make a big difference. So that's, I would say, another thing. And I think also in Malaysia, I would say that a lot of things are very concentrated. Yeah, like it's pretty easy to push a price, I would say.
Oh,
Yeah,
okay.
Because
It can teach us all.
yeah,
Their
like,
institution.
I mean, there are like so many. I mean, like retailers are mainly cramped into like, I would say, a few channels, right? And so if let's say Stockbit is part and parcel of the entire ecosystem, then at least we have an alternative channel as well. So people can kind of like segregate the information that they get, and also they don't just rely on one particular channel to shape their perception.
Yeah. If not, then they will fall into a lot of biases.
A lot of bias, a lot of traps.
Yeah. Okay, it's interesting that you say that following on to that Malaysian retail investors crowd into one, do you see the same nuances? Because you've invested in the Indonesian market, the Indian market, or the Chinese market. Do you see similarities in that, or is this very nuanced to just the Malaysian market that people?
No. I think Stockbit in itself, in Indonesia, it also falls into the same trap.
I see.
But I would say that Stockbit Indonesian community in Indonesia also follow the same trap in Stockbit.
Okay.
Because Stockbit is, I would say, like one of the main aggregator of information of community.
Okay.
But yeah, in terms of like India market and US market, I would say that it's a lot more vibrant, and because it's such a big market, right? And,
I see.
And you don't really have a place where you can just crowd information into one place.
Okay.
Yeah.
Interesting. So I guess that's just how the cookie crumbles, right? Because it's a question of size. Although Indonesia is huge everywhere, but in terms of the number of investors, I know India is massive. US goes without saying, but Malaysia is only a ringgit trillion market, right?
Yeah.
So I guess would it be fair to say that this is not a problem that we can really solve, but we can kind of reduce or mitigate?
Yes, I suppose so. I don't really know how to answer that question specifically, but I think you can perhaps just kind of like make it easier for retail investors to trade in a more healthier manner. I think the SC should really look into that. The Bursa should really look into that.
So what are some of the weirdest things that you've seen in Malaysia that you don't really see elsewhere, apart from like Selangor properties that you mentioned earlier on?
I can't think of anything offhand.
Okay, we're not that weird. We're not that weird.
Yeah, we're not that
Maybe
weird.
you guys can share with me some examples.
No, actually, one of the things that we realize about the Malaysian market is actually not like if you're in the Malaysian market, what we realize is that people think that is very different. Like here, it's all about, pump and dump, and it's not efficient and all that. But places like the US a lot better. I always bring up the story of GameStop.
Yeah, it's true.
If you think it's so efficient there, right? GameStop would have never happened. Right?
It's true.
So I think that it's yes, I do agree with you that definitely the Malaysian market has its own nuance. I don't know about you, John. What do you find to be unique about the Malaysian market?
I think what Rondy has said is I just wanted to tease out of him, right? Was there any nuance that we might have missed?
Yeah, that's right.
And what I found based on his feedback is that actually we're almost the same in a way.
Yeah, very similar.
Yeah, very, very similar. What does surprise me was that because I've never really looked into the Indonesian market. I mean, you guys are like what, 300 million population? 300 million? We are 1/10 the size.
Fourth largest country in the world, right, by population.
Yeah, fourth.
Yeah.
Right after US.
And
Right
yet
after
our
China, Brazil, US. Yeah.
and our capital markets are bigger. That's where
Exactly.
that's where I'm trying to.
And we're not even big. That's the thing. We are bigger than Indonesia, but we're not big, Malaysia.
Yeah.
We're only behind, I think, Thailand and Singapore or something like that.
Okay. Yeah.
But I think maybe, just another part which I would like to touch is that recently there is, we all know that in 2020, all of us can see some sort of paradigm shift in the space of the power of retail.
Oh yeah.
Yeah.
Yes.
So I think that in itself provides you with a very, very good opportunity. And being in Stockbit at the moment, although I'm not Stockbit. Stockbit in itself is just a technological platform, but a lot of people kind of like associate me as Stockbit.
Oh, you're not the dean of Stockbit? No, that's the thing.
We should always be separated. I'm just a content writer in Stockbit, right?
Okay.
But at the same time, of course, I try to make it grow in Malaysia.
Sure.
So what has happened is that I would say this year again, when John comes asking me about how do we monetize in Malaysia,
right.
Honestly speaking, like I'm not monetizing myself ever. Stockbit is not monetizing in any way.
Yeah.
We don't own like an educational platform. We don't own like all this like buy call, sell call channels and stuff. Like everything that I provide as a trading ideas, it's free and it's in Stockbit. Everybody can access it. But I would say that an intangible manner of where I personally has been getting paid is that I believe that Stockbit now has become like a recognized ecosystem in that I have gathered a lot of connections. I meet people like you guys, right? I meet a lot of corporate managements who would like to get in touch because they understand that Stockbit is also a part of an aggregator for retailers. So they would like to get in touch with the retail community and stuff like that. And so like what I have provided then is just a platform where we can communicate with directly with management. So this kind of like bring, I would say, information to another level. Yeah. So even for my personal kind of like investments, prior to this, I've always preferred to invest in, I would say like a more transparent market in the US. But of late, like I have realized that I'm starting to really bring a lot more investments back home, especially on companies which I have spoken to the management, right? So I guess everything is all about access to information.
Yes.
And right now, I think for me personally, because of Stockbit, I have, I'm blessed with the opportunity to have this sort of access to various influencers in retailers, right? In the retail space. Fund managers and also investor relations and definitely management.
Okay.
So I would say like for instance a really good stock that I had the opportunity and the privilege to interview. I would say end November, early December was like for instance DNO, right?
Oh, DNO. Okay.
So I spoke to Casey. We host like a Zoom live session.
Okay.
And I think there were good like 600, 700 people who joined the session. And we really just had like a very, very good information from the management himself.
From the horse's mouth directly.
From the horse's mouth. And we totally understand what the business is doing. Because the thing is, for instance, like for me, because my understanding in tech semiconductor, tech manufacturing is not like tip top. I mean, I can definitely learn from you, like,
We're still learning as well.
Yeah, but But like, so that's why you are never like very highly convicted into investing into it.
Yeah, agree.
But once you talk to like the management, you are able to see what they actually do, and you are able to see the business horizon that it is painting.
Yeah.
It's like a totally different thing. Like
Yeah.
After that particular session, I was so sold. Unfortunately, I was not able to visit their factory, even though they invited us.
Oh,
Yeah, because of MCO and stuff.
I see.
But it just goes into another level of access to information, conviction into a particular investment, right? So I personally I suppose I personally benefited in that. So I started investing in it. Of course, the share price rally has become pretty insane.
Yeah.
And it's actually very, very funny. And I would say, if let's say you're talking about how weird Malaysian market is, right? So what happened then? For instance, even in this DNO chat, right? Out of the entire, I would say 2 hours chat,
Okay.
a lot of people kind of like screenshot this and that, and like the retailers basically just focus on like the major customers kind of like page, and then they screenshot, oh, there's a Tesla there, there's a Neo there. And then they just create kind of like hype about this particular deep stock. But I mean, hype is one thing, but that definitely, I would think, helped to accelerate the price appreciation of DNO, especially to become like a retailer darling, right? But at the bottom of it all, like, this is a very, very solid company, and which has like a very good business growth and business horizon.
Right.
Yeah.
I think we'll definitely have another DNO podcast.
Oh, definitely.
In the next one.
Yeah.
But now let's shift to a little bit about what you're doing today outside of Stockbit, right? So you're saying that you're managing some family office money. Now, not too much about the investors and whatnot, but more about the way you look at investing now.
Yeah.
Now that you've stepped out of the institutions, and you're now one of the small guys, they're part of the retail space. And so how will you describe your investing style today?
Do you miss your Bloomberg, most importantly?
I actually still, fortunately, I still have my Bloomberg.
Oh, I see.
Well, how do I look into my investing and investment? Well, because I am managing a couple of family funds, and I suppose like different portfolio have a sort of like a different mandate.
Okay.
So some of them are like extremely safe, wealth preservation kind of like portfolio. Some of them allows me to manage on an annual absolute basis. But some of them are So for those that would like it to be like a wealth preservation sort of investment, so that is something that I really like. Because then I can be a long-term investor into something without having too much pressure. And I think that is, I would say, who I would like to characterize myself with the most. So I would think that, I mean, honestly speaking, like, there is too much definition on growth, value, all these sort of kind of like.
Tell us about it, man.
I'm personally I would say, if let's say you want to talk about it in that sense, I have a slight bias towards growth investing.
Okay.
Yeah. But yeah, I mean, so I invested. I would say like one of my biggest and best investments so far is I invested in Tesla back in 2018.
Okay.
Nice.
Actually, that's a funny story as well, because I think there are like some clips in YouTube that you can see me talk about Tesla in 2019 when I was like 50% down. So that was like one of my investment, because I'm more tilted towards growth, I suppose.
I see.
So what are some of the things when you see an investment, right? What are some of the few things you look at? You say, I need to know the answer to these questions.
Probably a rough checklist of what you would run through when you screen through an investment.
Yeah.
So definitely, sorry, just coming back to my previous talk about like investing in a company, right?
Yeah.
So I think that's I would say one of the main criteria. So you invest in the company, you don't really look into like the price too much. You think of a company whether it's gonna be big in the future or not. So that was what I had for Tesla. So
I see.
back in 2018, it was super deep value.
Okay.
Although it's categorized as growth, but it was deep value, right?
Okay.
A lot of people did not see what I saw back then,
Okay.
and so that's number one. Like even right now, I mean, I totally agree that in terms of the timeline on where the price is at the moment, it is overvalued.
Okay.
Tesla at this price, I would actually think when I was back in 2018, I would think that Tesla at this price would only happen, I would say maybe in 2023 or something like
Okay.
that.
Right.
But actually happened today.
Yeah.
Yeah. So, but yeah, I mean, it is all about business lah, I would think. Like
see.
I would definitely invest in an idea. I would invest in a business. Yeah, I think that's the main thing. So for instance, like companies like DNO, it became like one of my core investment right now in Malaysia.
I see.
And it is also because I had the opportunity to meet the management, I understand the business, and I would like to see it develop from quarter to quarter and stuff like that.
I understand. I've got two follow-on questions. The first one was obviously you've shared with us the success of your investment. When were the times that you actually made a mistake, and what did you learn from it actually?
Yeah, so I made a lot of mistakes. Like
Okay.
I would say too many mistakes like I can remember. Yeah.
What were the key learnings out of this?
Yeah. So I would say like, when I first moved into the Malaysian market,
Okay.
I was still very fresh. Like
see.
I don't really understand the market, I would say. And I jumped the gun because I believe in the story. So okay, I mean this was quite well documented in Stockbit. You can actually find
Oh,
posts
okay.
in Stockbit
Okay.
about this counter called Yong Thai. So
Okay.
I
Never
actually,
heard of it also.
yeah, so I actually invested in Yong Thai because I believed in the project.
Oh, Yong Thai, YONG. Okay, yes,
Yeah,
I have heard the company.
Yeah, the Malacca property company.
Yeah.
So I believed in the in the project that they were building, but it was just at the end of the day the execution wasn't right,
I see.
and the company made a lot of kind of I would say misjudgments.
Okay.
Yeah, and so it just didn't happen.
I see.
So what I learned from there is, I guess I actually should have cut loss a lot earlier.
Okay.
Because I was invited to watch the show. I think there was. I mean, it's called Encore Malaysia or something like that.
Okay.
Yeah, and they had this show in Malacca, right? So I was there during the first day of the show, and I didn't think it was that good.
Okay.
So it already fell kind of like some of my expectations.
I see.
Yeah,
I see.
And I believe, I kind of like held on to it a little bit too long because I felt I have invested quite a bit of trying to understand about the business.
Man hours you spent.
Yeah. So I kind of like dilly-dally about it, and when I actually cut loss, it was a massive like 60% loss or something like
I
that.
see.
Yeah.
I see.
Yeah, sorry.
Yeah, sorry, just one last one for related to that. Because Randy mentioned earlier about access to information, and in Malaysia
right.
he get access to management and all that. But then what advice would you give, or how is your opinion about investing in Tesla where you don't really have access? I mean direct access.
I assume you don't have Elon's
phone number. Unless you do, then it's a different story.
Yeah, but I would say, I mean, this is the good thing about the US market, right? Because there are plenty of information available everywhere. So okay, maybe like for instance, like what you guys are doing in Malaysia, like your YouTube and trying to explain about companies, those are like excellent. Like I really salute you guys for doing that, because it's something that Malaysia really need.
Thank you.
Right?
Yeah.
And but this sort of things in the US market is aplenty.
Yes,
I completely agree.
Yeah,
that's why we don't do US stocks at all.
Earnings call, deep dive reviews.
Yeah,
it's huge.
Yeah. So that is why I feel like I've always kind of like tilted myself towards US in the beginning. It's just because of this access of information. Like even during that time when Tesla was kind of like well hated by the Wall Street.
Yeah.
And there was not so much retail interest inside. But there was still like, I would say like a Tesla cult or something.
Right.
That was really extremely bullish and trying to tell people what they see.
I see.
Yeah. So I'm not like a pioneer in investing in Tesla, because in the beginning I was also one of the person that looked into Tesla's fundamentals, and I was like, hey, this is a short, right? But, but the more you look into it and the more you try to understand it, and I suppose like my investment in Stockbit kind of helped, because because like when I start going into startup investment, trying to think of things like a VC, you're supposed to think out of the box.
Yeah.
Not just all the things that
Traditional fundamental metrics.
like a lot of all these like value investing courses tells you, oh, you need to there are like 12 steps, increasing revenue and then increasing profit.
Right.
ROE have to be above 12%.
Yeah.
E have to be below 20. All these things.
ROIC
Then everything is box. It's like inside a box, right? And that kind of like it's not gonna help you to come up with like an idea which is gonna give you like multi-bagger returns.
Yeah. Got it.
So I mean that's that, I suppose.
Right.
How do you I guess the question is to your earlier point about Yong Tai, right?
Yeah.
I think what is interesting is that you did have access to information from management.
I did.
So one thing I always tell retailers is that it's actually not just about the access to information, it's the proper analysis.
Yes.
Yeah.
Right. And so my question to you is, what made you not cut loss sooner? What was the thing stopping you from doing that?
Yeah, so basically, like for Yong Tai, again, it was in the beginning, it was a story, right? It was like a story build up, like they're gonna do this, they're gonna do that, and the projections are here, and it looks all good. So a lot of people were invested into it.
I see.
When the execution comes, and I was there during the first day of the execution, during the opening kind of like of Encore Malacca, and I was there, and I didn't think that it was it matches my expectations. So
I see.
Then I should have, I guess, took a red flag, right? But I held on because I thought they're just gonna turn it around somewhat.
Right.
I mean, like the management is good. Like the owner have like extremely passionate about what they are trying to build and achieve. It's just that the execution was not there.
I see.
Yeah, and I think that is what is important. And perhaps maybe don't just get too caught up about an investment. If let's say it is something that you are not, it's not within your expectation, perhaps you just have to cut it
and move on.
And you mentioned something very interesting as well, is that because you spend so much investment in terms of your time and mental effort into the stock, that actually kind of stopped you from making the more rational decision.
So like invested in the stock,
Emotionally attached.
Emotionally attached. Again, I mean, I guess we will learn over time, I suppose.
Yeah.
Right.
All these things, as much as you can say, or maybe as much as I can say, I've been there, done that. I've been an institutional trader, but seriously, like in terms of emotional aspect of trading and investing, it's still lacking. Like you still need to improve on that.
There you go, guys. I think this is a very, very important note, because a lot of the fallacy that a lot of retail investors, especially, they think that once you have investment banking or all this experience, right, you have an edge.
No, I have a lot of fund manager friends as well, and we discuss things time and time again.
Yeah.
Like especially last year when we talk about rubber gloves and all that, we are like trying to convince each other that it is still going on. And
support group.
Yeah.
That doesn't help that you're good friends with Nyago, right?
No. But I mean, honestly speaking, I'm still invested in
right.
gloves.
Yeah, same.
Right now, my Supermax is like 30 or 40% under. I mean, year to date, because I took things from the first day. Of
course.
Yeah.
But I'm still invested in it. I mean, I still believe in the story.
Yeah.
And I just think that investing a little bit of your money, maybe I would say like 10% allocation in your portfolio in gloves, it makes a lot of sense because it's got value, it's got yield, and everything.
It's got real cash, real earnings, not
Yeah.
But we were interviewing another fund manager just last. We won't reveal his name because we want to keep it as a surprise.
Okay.
But
but by the time this comes out, they will know who it is.
They will know who it is already.
So you can just say it, no problem.
Yeah. So Peter he gave these three things, right? So he says is a stock price will move for three things. One is earnings growth that is exceeding expectation. Two is analyst re-rating, and the third thing he couldn't qualify. He just called it market follow through. And
follow through interest.
Yeah,
and
that's true.
And after he said that, and I reflect back, I've been invested in the Malaysian market ever since 2008. Of all the times, right, I invested. And I realized I look back at that amount of accumulated experience. Not to say any wiser, I'm still learning, but it's so true, because you can be so right at your valuations, but if there's no follow through interest, that's it, and that's where the patient game
The patient game.
the
yes.
patient game is so important because I just recorded a video for our SIB clients this morning about market cycles, and fundamentally business is doing well, but the price can take a beating for 3 years, and that's where the inefficiencies of the market is.
It's true. Like I think a lot of people that follows me in the Stockbit, and also like just normal friends and here and there, right? Like I've always told them that sometimes a stock might be, you're invested in a stock, and you believe that its true value is a lot higher than that.
Yeah.
But it just didn't move for maybe like about a year or a year and a half. But seriously, like I would say that sometimes in a life cycle of a stock, you need to stay invested in that 4 trading days where it just jumped like crazy.
Yeah,
and
spot on.
And if you miss those like just 1 or 2 or 3 or 4 days,
Yes,
and that particular opportunity is gone forever.
wow, spot on. Golden words, Rondy. Really.
Yeah, it is golden words. Actually, I'm just pulling up. You can ask. I'm just pulling up a stat that I shared on Instagram
Right.
about the probabilities of actually making money based on the timeline.
Yeah.
So the basic principle is what I actually did was I actually took data S&P 500 data all the way back to like 1926 or something like that, and I actually calculated their returns, right, based on time frame. So I think the shortest time frame was one day, and then I think the longest was it a year?
I think it was a year. It was
a year,
MJ.
right?
Yeah, it was a year.
So where is it? Just give me a second. Okay, so basically the title was like why you don't do day trading and why no swing trading. I know you're a 10% swing trader based on your bio, but why do long percent? And I guess that's why it's 10%, right? So with 95 years of data, right, you have a more than 2% chance of making 3.25% a day. And a 3/4 chance of making less than 0.5% a day. So the odds are already against you. And basically my conclusion was, if you include trading costs, right, basically you're working 3.5. 3 out of 4 times, 3 or 4 days, you're not making money.
No, I mean, as many years in the market, I think the big money has always been in the holding lah.
That's right.
If let's say you hold into a business that is extremely good and you have the patience to do it and you have patience for it to like blossom to its fair value, I think you will most of the time succeed.
I'm heartened to hear it from a prop trader because
we are right, guys.
No, because we know people in the industry, and this one particular acquaintance that we know. I mean, he's actually a client that he actually is he works very closely with the CIMB prop traders, and he was like sharing with me that these guys actually make tons of money, but it's really on like what you say, basis points, and because the volume is big. But over the long run, he says it's very stressful because it's like what you said, that your spreadsheet is just blinking and you gotta be the window is so small, right?
Yeah, not only that, I mean, like you're trading in Japan, Korean market, you gotta be in the office by 7. It opens at 8, right?
Man.
Oh yeah.
And you're trading in India where it's the hours go on. I mean, the closing time is like 6:30 p.m. So you're literally in the office
whole day
lah.
Yeah, man. Just to share with everyone, right? So for long-term investing as well, right? You have a 70% chance of making 5+% a year, 58% chance of making 10% a year, and 38% chance of making 20% a year.
Yeah.
So the odds are really good in your favor, basically, guys. For those of you who are listening.
Yeah.
Okay, good. So you share with us. Let's not talk about your bad investments, right? Let's talk a little bit about your better investments, right? Okay, I'm gonna guess it's Tesla, but what would you say is your best investment so far in your 12 years of investing?
Yeah, I mean, I think Tesla is definitely, I would say, the one that a lot of people when they come up with like a definition, like what sort of like traits defines you and make you like up there, right? I think for me that's Tesla.
Okay.
I mean, back in 2018, again, as I mentioned, like I've always been like a short Tesla guy.
Okay.
It's just that I would say around Q3 of their result, when they actually managed to prove me wrong.
Okay.
And I was like, hey, this stock can actually work.
Okay.
And as a matter of fact, they have such a big roadmap in the future,
Mm.
and they're going to disrupt like $1 trillion industries in the just automotive. and they're not even an automotive player, right?
Yeah.
They're actually like
Yeah.
an energy company.
Correct.
And even if, let's say, automotive is just part of the energy company, and even in that automotive component, they are not just cars. They're like, internet on wheels and stuff like
Yeah.
that. So, in the future where you can look into cars that is driving itself and all these things, I think Tesla's margin is not going to be just like the automotive margin. It's, as Elon Musk even said, like I would say about a quarter or two ago, he actually mentioned to the analysts that once you kind of like include the FSD margin coming in, the automotive margin is just going to be a joke, right? So I think I have like Tesla is like in I would say in a timeline. So when I first started investing in Tesla, I totally believed that it can easily be $1 trillion company.
Okay.
So it's gonna maybe take 5 years or 10 years. I actually thought it was gonna take 10 years
Okay.
from 2018
18
to
to 2028.
2028. But
Right.
we are there in we're almost there in 2021.
Right.
So I mean, I can say like, for instance, it's like a business is linear in their progression, right?
Yes.
To where it's it's gonna be. It's just that the stock market is just gonna fluctuate up and down.
Correct.
So right now, definitely we are at a point where it is above the linearity of the business growth.
Okay.
So it is overvalued as compared to the timeline.
Okay.
But maybe if, let's say, you're a long-term trader, right? Sorry, long-term investor
Investor.
in Tesla, it is still, there are still a lot more room for it to grow, I would say. But of course, you definitely need to have the patience, and you need to understand where you are and position yourself accordingly, I would say.
Okay.
What do you think is so that I give you a chance, so that you're just not purely bullish on this, so that when you listen back, in case you made a mistake, at least
Yeah.
you were aware of this, right?
That
So what you
was-
say is really the risk when it comes to Tesla. Well, now take the other side of the
The
argument.
devil's advocate view.
Yeah.
Yeah, I would say that it's the biggest risk in Tesla. It's so reliant on one person, and which is the CEO in itself, right? So if anything happens to Tesla, if anything happens to Elon Musk, I would say that a lot of the roadmap and what it's trying to achieve and stuff like that, it will, I guess, will have some impact, and it'll be shaken in a sense, and there will be a lot of uncertainties. But other than that, like if we are looking into a company that is really going to disrupt the future, I think it's Tesla is definitely one of it.
I see.
Nice. Okay. So Tesla is your best, so and Yongtai is not your best.
Yeah.
Okay.
But I think I guess where we are at the moment, I also would like to just as I mentioned to kind of like the owner of my family funds, right?
Yeah.
Mm.
Yeah.
I actually did mention to them that this year I am not expecting such a good year
Mm.
because some of them, like even my Tesla position is still one of the biggest, and I do expect some sort of correction. It's just normal, right?
Regression to the mean.
Yeah,
because it went
regression
up
to
so
the mean.
much, right?
Yeah, correct. So I mean, I have sold some positions of Tesla last year towards the end, but it is still, I mean, to do some sort of like rebalancing of the books.
Yeah.
Because seriously, what Tesla had done last year,
It
even-
grew so much. that
yeah, like it just ruined my entire
Allocation rules.
allocations and stuff.
Do you mind sharing like what was the position before and then after?
Yeah, I mean,
this,
so
Percentage wise.
So
Yeah.
Tesla, okay, for one of my portfolio, which I really like because I have an absolute kind of like return
Right.
performance based on it.
Okay.
So Tesla was like, I would say about 30% of the equity portion of the portfolio.
I see.
Which was in the beginning of the year. Okay, well, towards the crash, I was about 50% cash.
Okay.
But Tesla was still so during that time I would say Tesla was about 50% of the equity portfolio.
Okay.
Yeah. So it has. I think last year it went up by like 5 or 6 times, right? So yeah, so that's why I had to rebalance towards the end because I would like to have more cash and stuff like that.
Okay.
And of course, I do not want to enter this year with Tesla being such a big position in my entire
Right.
portfolio.
Mm,
So
mm.
but even right now, as I mentioned to some of the family fund that I'm managing, right? I don't really expect this year to be pretty good because I do feel like there is gonna be a correction in Tesla. It's
Mm.
just
Okay.
it's just a reversion to mean. But again, I also kind of like this would be one of the year that I when it comes to growth and value and stuff like that, to that definition lah,
Yeah,
right?
yeah.
Yeah. So I would say that this year I diversify more than ever. So I am starting to, I mean, I still own some of the high aggressive growth stocks in my portfolio, but at the same time, I am trying to venture more into, I would say, like a low PE sort of like recovery stock. In Malaysia and also overseas.
I see.
So and rubber gloves for sure, right? Yeah, and I think maybe like just an advice, right? So whenever you are looking into like the high growth, aggressive kind of like stocks, I would say that just stick to those that is market leader in that space.
Yeah,
those that is extremely good in terms of their fundamentals. Those in which the previous quarter result, which is the Q4, especially when we are talking about semiconductor stocks, tech manufacturing stocks, you have been seeing them to continuously growing.
They've delivered rather than just a promise of a story
They have delivered, and they recorded like new record year and stuff like that. Yeah, I think those are the stocks that you can still be invested in. Otherwise, just be careful
Yeah, just so you know, MJ and I, we really hate the definition of the growth dividend whatsoever. we just said you're an investor. Period. You know.
That's how. I mean, all of us are value investing.
Yeah,
exactly. All of us are value investor. Right?
Yeah,
so,
yeah.
You wouldn't buy something if you didn't think it was undervalued, lah. At the end of the day.
Yeah.
Now, okay, so just by those few sentences, I already have so many questions to ask you. Okay. So the first one is very interesting. You mentioned very briefly, but I caught it, which is that you're 50%. You were 50% cash.
Yeah.
What is today? What is the cash balance today?
Okay, so right now, I would say about 25% cash.
Okay.
I'm 25% cash. But yeah, I am. I don't know. I'm actually sitting in quite a uncomfortable position, I would say, because I don't really know where the market is gonna go. Honestly speaking, like I do feel when I speak to Nyago in Stockbit, he kind of like highlights to me how the market is really a little bit overheating, especially in the tech sector and stuff like that. But at the same time, you can't really be not investing at all.
Yeah, exactly.
I think the biggest risk, if anything, is not being investing at all.
Like what you said, the 3-4 days, man. You never know when it's gonna happen.
So you need to invest, but at the same time, you do know that a certain sort of sector or something like that is a little bit overheated.
Yeah.
Right? So I guess you just have to manage it, which is why this year more than ever, I am really realigning my portfolio into a very balance between the so-called growth and the so-called value.
Yeah, understand.
And defensive.
Yeah. Does it help that the money that you manage or the family office fund that you manage, if you have a local only mandate or a global mandate, does it help in a way?
Yeah, I think so. Okay, so for me, I think the good thing about managing my family funds is that they give me the flexibility of what I want, because honestly speaking, I know that most often than not, people always say you should be objective in the way you approach investment. You should always have one characteristics and stick by it.
Okay.
But I personally, I'm still holding towards like the more flexible type of investment. Like I can be, I like to have the dynamic where I'm flexible. One day I would like to be more biased on so-called like aggressive and growth.
I see.
Another time I would like to be more aggressive of value and stuff like that. Yeah. So I'm not like complete ARK Invest or like complete Warren Buffett, right?
Yeah.
So
hybrid.
I would say, again, I'm still learning.
Understand.
But I just try and see what works lah.
I was leading that question from the point of, because you've had experience with Indian markets and China and whatsoever, right? And compared to saying that, let's just say certain stocks within Malaysian market are overheated, like tech companies being valued at 70, 80 or 100 PE, right? Yeah. But because if you have a global mandate, then in a way you have opportunities to see more undervaluation of stocks versus that of Malaysian.
Yeah, for sure. I mean, it still baffles me that a company like TSMC is trading at the valuation.
You just took you literally took the words out of my mouth, because I was just sharing this with Vitrox trading at 77, PE, the earnings is like less than a quarter of TSMC. And TSMC is trading at 32. So
correct. So I mean, it just baffles me how TSMC, SMIC, Lam Research are trading at like a valuation discount to whatever its Malaysian counterparts. Right?
Yeah.
It really baffles me as well. But at the same time, I guess this is where your I would say how you understand the market plays, because right now I'm at a level where I'm starting to really understand the characteristics of the Malaysian market, and this kind of like sticks into the Malaysian market, I suppose.
Yes.
So this is also where I suppose like historical comparative is important.
Yeah.
So so I think that's the answer lah.
I was just sharing at MMJ and I said if you look at VTrox today, 77, right? But you do price adjustments and everything. Historical, they used to trade at 120 PE.
So
DNO is 128, right? Who's to say it's a bad investment? It's like, bro, I got DNO to you. Building on John's question, right? What do you know your cash? Sorry, not your cash. Your country geography allocation is right now, and also you mentioned earlier on that 25% is making you a bit uncomfortable in terms of cash position. So what would make you comfortable? Two questions.
Yeah, I mean, okay, so country specifications, I would say, the US is still one of, I would say, my biggest one.
Okay.
But I am seeing more and more investments that is being shifted to Malaysia right now. Just purely because, seriously, the number of CEOs and managements that I've been seeing in the past, I would say 3 to 6 months are really awesome lah.
I see.
Wow.
Like I do have access to them, and by just seriously understanding the business in itself, it really gives me a lot of perspective.
I see.
So like for instance, last week I was just interviewing, I think there was Pestec, right?
Oh, Pestec. Yeah, Paul.
So I was interviewing Paul, and he really gives me a lot of good vibes lah, I would say. Yeah. I understand, like, when we just chat, we can really see his passion.
Yeah.
And you can really see how technical and how much he understands about electrical engineering.
Yeah,
and stuff like
I read his profile, man. It's quite interesting.
You know why I find what you just said so, because there's a huge, I would say, myth, and you tell me whether you agree with me or not. There's a huge myth that a lot of especially young Malaysians are saying, right? Don't invest in the Malaysian world because it's not innovative, it's not tech savvy. You get CEOs who are just, just there to receive money and pay and all that, compared to the US.
Yeah, I think there is some truth to that. Like, I would say a lot of the Malaysian companies, it is still riddled by a lot of funny businesses lah.
Funny characters as well.
Funny characters, funny businessmen who do things like that and like this that use their like company as, I don't know,
proxy lah. It's a
proxy to do whatever, but honestly speaking, every now and then you do find like extremely good counters. So I would say I have been also an investor in, for instance, companies like Yinsen. Yinsen is a good counter.
Yes.
Very, very well managed. I've also invested in counters like, maybe this one is a Malaysian company but listed in Singapore, like Riverstone.
Oh, right? Riverstone,
right.
Okay.
I mean, of course, right now they are still, they are in a bad sentiment, but when it comes to like investing in a good manager, a hardworking manager, they are definitely one of them as well. And I mean, so companies like, for instance, back to DNO again, companies like MegaFirst, right? So these are companies that are really, they have solid and, of high integrity, I would say, in terms of the ownerships, in terms of the management. And again, I think at the very, very fundamental of all your investments, you just have to invest in the proper and the right business run by the right and the proper management.
Yeah, I just to latch on that point, remember earlier you said in VC investing or early in angel investing, you can't rely on numbers, and your rule number one was actually who is running the show. The vision. Okay.
Yeah.
So, since you brought up about management, I thought that we only have 13 questions, but I think we have 30 now. Thanks, Rondy. No, but you mentioned management and you talked a little bit about integrity. So I want to get your thoughts on actually how do you qualify for integrity and how do you qualify for good management?
Okay, just maybe one of the easiest factor is, I would say, you can tell a lot from reading annual reports and quarterly reports. Sometimes when you look into like Malaysian quarterly reports, right?
Oh
you're
boy.
like, oh my god! Like the amount of information is being given is so vague.
Yes.
Right? And it's just one liner.
Yes.
Oh, our profit improved because our sales improved.
Because
Full stop.
forex. Because forex.
But like, there are some companies which, you can tell that they really would like to provide the investors as much information
Transparency,
as they can.
yeah.
The transparency. For instance, just take Mega First, like their quarterly reports. You can it's as simple as it's an open book lah.
Yeah.
Yeah. So these are like probably one of the cues, I would say, right?
Yeah.
And even like annual reports as well. So these are, I would say, like a normal retailer, they can look into this.
The struggle is most retailers don't read those reports.
Yeah.
They even ask us how do you download it? Where to find it?
I think to be honest with you, right now we are at this could be like an advice, I suppose, for everyone who's listening. But I know that right now we are in a place where it is all about digitalization and information is just at your finger clicks, just
Correct.
like that, right?
Correct.
And but the thing is, I think there are just too much time being spent on your phone.
Yes.
Yeah, like the first thing that you wake up, you straight away look into like your
Stockbit app.
I look into my Stockbit app, but some people I know,
Facebook.
like my interns and stuff, they straight away look into like their Telegram lah, their Facebook lah, Instagram and everything. But and sometimes people spend too much time in all these apps,
Yes.
in all these groups.
Completely agree.
Where I feel like then your mind is just so cluttered with information that might not be life changing.
Spot on, man.
Yeah, so it's just like short-termism, right?
Yeah.
So you come in and then you're like, oh wow, so this person said data prep. Okay, I'm gonna trade data prep and stuff like that. And it's just, these are all momentums and technical trades, which is all okay.
Yeah.
But I would suggest, especially those that is looking into real investing, to just take a step back from all this. Try and have some hours where it is just without phones, and just look. Maybe when you have phones, maybe listen to like a YouTube channel like from you guys.
Oh,
and stuff
man.
like that.
Thank you.
Listen to this podcast with Rondy.
To learn about companies and try and really do an in-depth research about the business.
Yeah.
And where it's trying to go, and whether or not this is a business that you can invest on, whether it can scale properly, whether it can be profitable next year, the growth and stuff like that. Where is the roadmap and what it's trying to achieve in the long term? I think this the sort of like, then you will get a fresh and an obscure idea. I suppose there is really like a lot of companies in Bursa Malaysia which is still undervalued, and I would say.
Yeah.
And
Absolutely.
yeah. So just look into it and try and understand like what is happening around the world.
Yeah.
I think you can really make a difference in your performance of your investment. I suppose.
Great. Latching on that, I've got so many questions, but maybe just latching on that about what is your reading habit, or how do you start your day and declutter from the noise in a way? So
Right.
yeah.
So just from the point of view, from the very moment that I'm trying to, I'm quite a boring guy lah, to be honest. Like
I like boring.
We're all analysts.
We are all very boring.
I look into, I do read a lot of research reports.
Okay.
I do subscribe to a lot of like newspapers like Financial Times, Bloomberg, and
Wall Street Journal.
Yeah, Wall Street Journal, all these things. Barron's. So I like to read a lot of memos, trying to understand what is happening in what is the latest that is happening around the globe.
Okay.
First, and after that, I just try to filter my idea into like trying to see what are the sort of companies that might benefit in a certain angle here and there.
Understand.
Yeah, so for instance, like just to give you guys an example, I would say like yesterday and the day before, I tried to understand more about the Suez Canal on how that could actually impact in the short term. Is there any short term trades that I can put on?
Yeah.
Or maybe is there any sort of like short term trades that could potentially be thrown away just because of something that is a short term disruption?
Understand.
Right? So could there be a potential pickups from there and stuff like that? I would say. Yeah.
Great.
So I heard you say something very interesting just now, which was that you have interns.
Yeah.
So is this so you have a research team working under you? at your family office, or this is under Stockbit or
this is under Stockbit actually.
I see.
So just to let you guys know like how big Stockbit is in Indonesia, right?
Okay.
So I think right now we are employing about 200 to 300 people in Indonesia.
What's the spread? What's the spread like for their responsibility and marketing and
Yeah, honestly speaking, most of them are like developers lah.
Wow.
There is also
I
a
love
huge team in the marketing point of view. And
Okay.
there are some investment analysts here and there. So
And this is shared between Bibit and Stockbit, or is it
No,
purely
no.
just Stockbit?
now they are actually segregating into two lah.
Wow.
Yeah.
Okay.
But it's all under Stockbit as a group.
Nice.
I
So,
see.
yeah.
I see.
Yeah, really looking forward to the growth. Really expecting the growth for Stockbit.
No, I mean, I was just talking to the founders, and
Yeah.
I mean, we do really want to expand to Malaysia because I think our experience here has been nothing but like good.
Okay.
We do receive a lot of good feedbacks about Stockbit as well,
Okay.
and I think in terms as a market in itself, I think Malaysia is. I mean, it's very interesting lah. It's a very interesting market. One of I would say the hottest in terms of retail participation in Southeast Asia as well.
Okay.
So yeah, hopefully when things sort of stabilize in Indonesia, we can really focus more in the Malaysian expansion.
Yeah.
Looking forward, man.
So I just
Yeah.
want to ask you. Sorry.
And I think one of the first thing, if anything, that I would like to bring into Malaysia is definitely like the fundamental data.
Oh, great.
Yeah.
I'm looking forward.
So right now he has what 50,000 active members,
For
right?
Malaysia, is it?
For Malaysia, is that right?
I think about 50,000. Yeah.
So what's the target for the next year or 5 years?
I mean, it's okay. Like we don't want it. I mean, like for instance, for me personally, even if it stays at around this current juncture, it's okay. Like the group, the founders doesn't really have any expectation for Malaysian growth at the, per se.
Okay.
But yeah, I mean, for me, it's all about. I believe right now small is not bad because we really can see the quality lah.
Yeah.
Okay, so just give you guys again another example, right?
Yeah.
So of course the Forum i3
Yeah.
they had like portfolio picks of the year and
Yeah.
stuff like that.
Yes.
And then I think at the same time, Stockbit also have like the portfolio picks of the year.
Okay.
So if let's say you actually Nyago did this study.
Okay.
Of
So-
course he did.
So okay, he didn't do the i3 one, but I did the i3 one. So
Okay.
if you just look into like the top 3 picks between i3 and
Stockbit.
Stockbit, you can really see like what is the sort of the counters that people are focusing on. So I think one of the key picks in i3 or rather the top picks there is like Jacks.
Oh
in-
my
in Stockbit
goodness!
is like,
It's still
uh,
one of the top
Yeah.
picks. It's
So
been there for
in
5
Stockbit
years
is
already.
like DNO, right? So you from that angle, you're able to kind of like I suppose feel the sentiment lah. Yeah.
Right.
I roll.
So speaking of stock picks, right? I have to ask you now. Okay, just quick one, right? You don't need to explain unless you want to. Okay.
Yeah. No
What
problem.
are 3 stocks you're looking at now for the year? And then if you want to share, what are 3 stocks that you would not be looking at,
Yeah.
or industries if it's too sensitive for
okay.
you?
Yeah, no, I mean, no, I think, again, I'm not a guru or
Yeah.
anything like everything that I've done.
Same with us, we're not
I've
gurus too.
provided it's all free and you can always see it in Stockbit.
Yeah.
But yeah, even like the top 5 picks, we actually had this conversation in Stockbit end of last year. What is
Okay.
your top picks for the year and stuff like that? Also, it's in Stockbit. It's in our YouTube channel or Facebook or something like that.
Okay.
Yeah, but I mean, unfortunately, DNO was picked at the beginning of the year, and now it just rallied like
Crazy,
now. So I wouldn't call that value right now.
Okay.
Yeah. So but again, it's a very good company to be invested in lah. I would say that last week when I speak to Paul from Pestec,
Yeah.
I find that extremely interesting.
Okay.
Yeah. So that's I would say that's one. And there is another counter which I feel like a lot of the Malaysian market is really overlooking,
Okay.
and that's Megafirst.
Mega first.
Yeah,
Okay.
MFCB, right? I mean, I really like the company.
Okay.
You know how a lot of focus have been in like renewable energy, for instance.
Yeah.
Yeah. But do you guys know that who is the most profitable renewable energy company in Malaysia? And I would say not only this year, but maybe like in the next few years, it's definitely going to be Megafirst. There is no way any of Park or
Samaidan.
I mean, don't talk the EPCC guys even, you know, but those EPCC guys and a lot of the newcomers that we are seeing, right? There is no way they're gonna be as profitable or, you know, close to profitable as Megafirst. So Megafirst owns like a hydropower plant in Laos, and it's generating, I would say, close to about 300 to 400 million in terms of net profit a year.
Wow.
And that is all cash, right? Because it's concession business.
Yes.
Yeah.
So it's now a matter of how they're going to utilize this cash.
I understand.
And I think now a lot of the market is looking into it, and they're sort of disappointed from the point of view of the dividend. But I think they're missing
Standard.
they're missing the big picture.
Yeah.
And even right now as we speak, I think Megafirst is trading at about 10 times PE.
Oh man.
For a concession business.
For a concession business, for a business that is extremely profitable, and for a business that is having this sort of like net profit in the foreseeable future.
Yeah.
So I think that's one of my I would say key investment as well.
Okay.
And I think Pestec is one of the new one which I'm really looking into.
Okay.
I think that's two for now. I don't know about any other ones. Yeah, maybe I'll just leave it as there lah.
Okay.
I think the rest you can look into. You can just find me in Stockbit and see what are the other things that I'm invested into. Yeah.
Sure.
So what about the areas that you would
Not
avoid?
touch. Yeah.
Yeah, you would avoid looking
I
into.
guess, you know, just it's the obvious lah, I suppose. You know, I'll never touch things like all those goreng plays. I suppose
Hot stocks.
hot stocks, penny stocks. I'll try and especially penny stocks that doesn't have any fundamentals that backs the movement of the share price. I'll definitely avoid those things.
Okay.
Okay, very political answer. Thank you. Okay, so enough about enough about stocks. I think this will be the last question, right? It's just more about your personal life and personal finance, and you know, having invested for your family, and then now also you are a father, right? How has that differed from your your younger days? Has anything changed your life by doing that?
No, I think maybe I forgot, but I also have a side business in which I am doing. It's just a normal bread and butter business.
Okay.
Yeah. So I think I do that because I believe to be a good investor, you also should be a good businessman.
Okay.
Yeah.
I think by being a businessman of some sort, you really understand a lot more about the world of investing. But I'm quite blessed in a sense that that particular business, my business partner is also managing it.
I see.
And I'm also definitely blessed because by doing investing, I have a lot more time to spend with my family. So yeah, definitely how I would say I mean, in terms of like work-life balance, it's a lot better than me being as a trader last time.
A prop trader, yeah.
Yeah.
I mean, being a father of two kids, right? When do you think, and probably getting some support here because I'm a father of two too. When do you think would be the right age for you to share with them the world of investing, and how would you think you would do that actually?
Oh, I think I'm. Start them young, man. Like, you know, I am.
How young is young?
I mean, I am trying to teach my girl some games. You know, trying to. I mean, she's 4.
Okay.
So I try to like tell her to speak some interesting kind of like financial lingos.
Wow.
And see if she can say it correctly because she finds that like an interesting game.
I see.
So I asked her to say like terms like volatility, which is like
yeah,
for 4 years old, right?
Arbitrage.
Arbitrage and stuff like that. So yeah, I mean, start them young.
Are you gonna paste a photo of Warren Buffett in a room?
It's
Accounting book, somewhere.
No.
Yeah. So it's been definitely an interesting chat. Do you have any more questions, MJ? I mean,
I do lah, but
yeah,
I think we'll save it for the next one.
Yeah, we'll save it. Definitely save it for next one.
And before we say goodbye, where can people find you?
Yeah, where can people reach out to you?
Yeah, I mean, just simple Stockbit lah. You can find me in Stockbit. I think that's
Rondy at Stockbit, right?
Yeah, you can. I mean, in Stockbit, you can just type Rondy and you can find me.
Great,
Yeah.
great. Any other place to hang out with? Hang out, yeah, Twitter, Instagram.
Nah, just
Stockbit.
Stockbit. That's my only kind of like public portfolio or public place where
Right.
people
Great.
can look into me. Yeah.
Great.
Well, it's been an absolute pleasure.
Yeah, thank you.
Hopefully you like a second one in the future.
Mhm.
And yeah, guys, I hope you've been thoroughly enlightened about how really the Malaysian market can progress as a market in terms of intelligence, in terms of information, in terms of just overall awareness of things going on in the stock market. I also hope that you now know what a prop traders look like and how it's not really what you think it is. It's not as easy as it is.
We are all still human.
Yeah. And you now also learn that here is someone who is from Indonesia telling us, right? And I think Niago did the same thing as well.
Yeah.
These are people not from, in a way, Malaysia, telling us that the Malaysian market also has opportunities.
Bursa didn't pay him to say that, right?
No.
Okay.
No, man.
All right. And of course, we also talked about, what would we talk about? The picks for the year.
Yeah.
How to look at investments, how to really not just look at PEs and earnings. And of course, if you're a father listening to this, I hope you also get some insight about really what it's like to be both an investor and a father. And if you guys have enjoyed the podcast, remember to give it a like on YouTube. Follow us on both Spotify and subscribe to our YouTube channel. And see you guys in the next podcast.
All right.
Bye bye.
Thanks, guys.